Hi, it's Michael Farr from Farr, Miller and Washington. Markets so far this year have been tumultuous. Even the beginning of April has seen a lot of fluctuations. Yesterday's markets moved over 209 points. There was a great dip and then a great rally. We've seen tech stocks selling off. We've seen a lot of the gains, particularly the most volatile, higher flying stocks from 2013, giving back a lot of their gains here in 2014. But money's moving into safer areas. Blue chip stocks like Johnson & Johnson had a much better day. These solid balance sheets, global presence, global earnings, cross currencies and cross economies, I think make a great deal of sense for those who would like to be more defensive. Farr, Miller in Washington, we tend to always be somewhat defensive. We saw Treasuries rally yesterday. The 10-year Treasury note fell in yield because the price went up to 2.6%. Interest rates are staying very low. We don't see a whole lot of GDP growth, and market participants and investors are nervous. They're waiting for a big correction. They're fearful. They're almost panicky that the market's going to correct. I've been doing this a long time. Markets are supposed to correct. Some dip in prices is to be expected. It's not to be feared. It's not to be panicked about. That's what markets do. They go up and down. So, if you own really good things, and if you have a long-term time horizon, you will survive markets like these. Yesterday on CNBC, I was asked if I was really fearful about what was happening in today's markets. And I said, you know, after a 32% gain in 2013, a sideways pattern for stocks didn't strike me as at all bad. So, earnings season is upon us. Companies are not gaining hugely on the top line. Bottom line earnings are increasing, but not robustly. We're moving in the right direction slowly. Fundamentals are indeed improving, but things are going to take a while, and we might have a 10% drop. I would kind of welcome it. I've got some money on the sidelines, and I'd be a better buyer at better levels. So, keep your powder dry. Hang in there. If you need some help, if we can help you with your portfolio or your investment strategy, estate or tax planning, give us a call. Keep some powder dry and stay with your investments for the long term. You'll do just fine. For Farr, Miller in Washington, D.C., I'm Michael Farr.